No, I've been noticing something interesting about gold and I wanted to share it with you. It's really, really interesting to see how geometric patterns, especially now we are talking about triangles. In another video, I will be talking about circles, but now we are talking about triangles, and different triangles apply to different types of pairs. I have only been regarding gold and GBP yen, but if you would like to make further analysis, I'd be happy to know about it. It would be really interesting if we could create a database about this research. So now I want to present you this idea about triangles in the Forex market and how it can help you um, predict how long approximately you'll need to stay in a trade to reach your desired target. Um, this is calculated based on angles I have observed um, for more than 1 month, and it's very different. For example, for the GBP yen pair, I noticed the angle always forms a 90 degrees angle when it reverses. Uh, of course, there are sharp movements, but I have shown you in previous videos, if you look at the analysis I have put in the GBP yen pair, sometimes there is also a triangle which is always right angled, and this helps you see approximately how long you need to be in a trade before it can reach your desired target. In this case, we would know the length of this edge and this degree here. Of course, the movement can be sharp, but still you can usually apply this right angle triangle. This means that if we had a movement like this, a sharp movement down, in this case, it would be 60 degrees movement down, and whatever is above 45 degrees needs a correction. We would need to wait for around 2 days, almost 2 days and a half, for the price to reach the initial price level where the drop had started in the first place. Um, Again, I noticed this many times that this 90 degrees always um, appears. The triangle appears, of course, not always in this position, but is rotated in all ways. The edges have different length. That's why you should see how you can apply it in your work, in your analysis. I find it very, very helpful. Uh, but here in this video, I will talk more about the gold pair because it's so interesting as the angles are different for this pair than for the GBP yen. I have been regarding a few examples and I noticed that for 90% of the cases for gold, this 70 degrees angle tends to be forming. This means you don't have to wait so much until the price reaches the initial point where it started to go down. So in this case, we know this edge, we know how long this edge is, we know this degree here, it's 70 degrees most of the time. This means if a sharp movement up happens, and it could also be without a correction, we would go from this point, but not directly up. We have to take into account that the price will slow down because it needs approximately 1 day until it can reach the initial target. In some cases, rather rare, for this pair, we can also see here a 60 degrees angle. This means after a sharp drop, there is a sharp reversal. And if this angle will be around 60 degrees, this means you don't have to wait so much. You would wait under 1 day until the price reaches the initial target again. I think that's why this pair is so loved by traders, because the price tends to drop or grow much sharper, and the price tends to correct faster. You can see here for this example, for the first example where we have here 60 degrees for this triangle, we had to wait under 1 day. For the second example, we had to wait a little bit over 1 day with 70 degrees. And for the GBP yen example, we had to wait 2 days and a half. Of course, it can happen also with gold that you have 90 degrees, but this really happens really rarely. Now let's see a few gold examples. Here I have put them on this chart from the 2nd of July this year. And I noticed another interesting thing. If we draw this line, this edge from where it started to fall, and then we draw this other edge from the point the falling stopped and the reversal started until where the price stopped the rising again, this triangle gets formed, and the second angle will be 50 degrees. I measured here again, and here the angle was 60 degrees. Here we have 70 degrees, and here we have 60. So what does this mean? This is extremely helpful because we know two angles and one side. This is enough to let us predict the whole triangle, which is just great. I noticed that these first two triangles together make always 120 degrees. This means gold tends to move in equilateral triangles. So it moves fast and in a predictable triangle move. So two angles together make 120 degrees. The first two angles, we could call this alpha and beta, but I am now working in PowerPoint and I don't know where to take these signs. Anyway, you will know we have to deal with alpha and beta because these are the first two angles we can know. I would also want to make this red because this is very important. For the next slide, I have another example from the 3rd of July. You see here I took the 30 minutes chart, but the same applies also for the 15 minutes chart. You'll see the same angles. Here at this sharp drop here we have 70 degrees, and here I have measured we have 60 degrees. Together is 120. Here we have 70 degrees and here we have 60. It's so important that we can know two angles because knowing this angle, this edge, and this angle, we can know the other angle. The third angle would be another 60 degrees. And there are not so many points where this angle could be 60 degrees. This means we could not move this triangle. Look, we could not move it like this. Now it's not a triangle because then the angle here would be different. So it's really, really nice what is happening here. In the next example, this looks a little bit different based on the assumption that alpha and beta together make 120 degrees. I had to prolong this triangle a little bit upward. And as you can see on this chart, the price didn't reach this point here. This is normal. It will happen all the time. Of course, even if we regard the triangle formation, this cannot be the only analysis we make. It's a helpful analysis for predicting the time needed to stay in a trade. That's all. But here we would have put the take profit target at this previous high. So even if the triangle didn't form here a 60 degrees, still it helped us know approximately how long we would have needed to stay in this trade. Here another example. A smaller example here. This I didn't write anymore, but this has 60 degrees, this triangle, and this one also has 60 degrees. Another interesting thing is that when we see the same triangle repeating in a very short period of time, one after the other, the next one is either 1.5 times higher or smaller. This is also a very interesting and beautiful information. This link I will put you in the video description because here you can calculate everything about the triangle, knowing this 2 degrees and 1 edge. I hope you found this interesting and you will apply it also for the pair you like. And again, I would be very happy to know about the degrees you discovered also for other pairs. Thanks for watching and see you soon. Bye.